As we all know, the digital asset ecosystem is constantly changing, often in unpredictable and exciting ways. In today's episode, Dan Tapiero is joining me again. Welcome back, Dan. Dan is a founder, CEO, CIO, and managing partner of One Roundtable Partners. He's got one fund, 10T, I should say. He's launched another one, 50T fund, because he believes the digital asset ecosystem in the next 10 years will go from $5 billion now to $50 billion. Welcome back to Crypto Clarified. My name is Benjamin Dean. I am Director of Strategy in WisdomTree's digital assets team. This podcast, well, we help you navigate this very interesting digital asset industry. And today's episode, we're going to cover lots of interesting topics as this space evolves and the world around us also evolves. Before we start, US listeners, check out wisdomtreeprime.com. You can find the application on the Apple or Android app stores. For this podcast, subscribe and share. You can find us on Spotify, YouTube, iTunes. And finally, check me out at Benjamin Dean on X, the Bird app. Now, before we start the episode with Dan, time for the disclaimer. Before we begin, I do need to state the following. To clarify, the views and opinions expressed in this podcast, those of WisdomTree and One Roundtable Partners, and they're subject to change. Anything we present in this podcast is not intended to be relied upon as forecast research, nor as investment or tax advice. The information and opinions expressed in this podcast are not a recommendation, offer, or solicitation to buy or sell any securities and reliance upon them. So at the sole discretion of the listener, please remember past performance is no indication of future results. All right, let's cut to Dan. I hope you enjoy this interview as much as I enjoy getting to do it. Dan Tapiero, welcome back to Crypto Clarified. It's so nice to see you.
Glad to be here. Glad to be.
So there's been a lot that's changed since you were on the show last time. That was a bit over a year ago, and I mean,
wow, yeah, a lot.
Feeling a bit older, huh? Ooh. But a lot of positive news actually, as the space has changed and is maturing, professionalizing. We can cover some of that later, but I'm really curious to hear about what you've been up to. You're starting a new fund.
Yeah, we closed our fourth fund in October, and that fund ended up being a little smaller than we'd anticipated, but it's exclusively focused on secondaries and special situations. There haven't been, as you know, we are the largest and probably only really fund in the world, the growth equity fund that's exclusively focused on crypto, blockchain, Web3, digital assets. We've made 23 investments, 1.5 billion AUM. And, we had the idea in the middle of 23 to start raising a fund for our fourth fund, and there weren't any growth deals. So, in fact, in the last 2 years, there's only been one real large growth deal, Phantom, which just happened. But there were many, many opportunities in the secondary market. And so we raised that fund in 23-24, and we're fortunate to be able to buy equity in the companies in the space at tremendous discounts. And we were buying directly from employees, ex-employees, C-suite leadership, also buying from brokers. We're actually quite a prominent buyer in the secondary market. Of the 1.5 billion AUM, at least 600-700 million of it has been bought, has been secondary. So we are very plugged in there. And when there are opportunities to buy stock at a discount in companies we know and like, and sometimes even companies that I sit on the board on, we're very active and eager to purchase. So we closed that fund in October. And then all of a sudden, as you just noted, the whole world changed with this election. I've never seen or experienced such a rapid 180-degree change in anything. We went from having my companies being attacked by the previous administration, sued by the SEC, essentially, choke point 2.0. They basically, the administration was doing everything they could to, damage the U.S. As a place that crypto companies and new protocols would come and start their projects. And so it was a very difficult place to manage a business, and many people, moved arms of their business overseas. And then all of a sudden, with this new administration, Trump has been very pro crypto, blockchain, as I said, Web3, digital assets. Elon Musk, of course, as well. We've got JD Vance, the vice president, who's also a Bitcoiner. The new head of the SEC, CFTC. We have a new David Sachs. We have a czar of crypto. I mean, it's you can't imagine the difference. And so it's probably right now the single most exciting time to be in my space specifically. And remember, I don't really consider myself a venture capitalist. We don't really invest in the early stage, pre-seed, C, A rounds where we tend to look at companies generally with $50 million in revenue or more, and who are thinking over the next several years of becoming public. And I think this is what is really exciting now, is that there does seem to be a window here where the administration is going to encourage more developed, buttoned up, proper companies that are in the space, that are building out the infrastructure, picks and shovels types businesses to come public. Coinbase is the only large public company in our space. I mean, Galaxy, is a little smaller and is up in Canada, but I think we're going to see this year is going to be the year of the IPO, and we've already seen deal making pick up. One of our companies is really advanced in terms of potential M&A transaction, and I think we're going to have 3 to 5 more that are public. Circle has already mentioned that they're coming public at some point. We think it's summer. eToro's out there. There was a story leaked the other day about Gemini considering it. I think this is a chance for the administration to, make a statement by having companies come and be public here and start their businesses. And my early sense and what I'm hearing is that is actually going to be the case. So I'm pretty excited. Pretty excited for existing portfolio companies, but also I think we're going to start to see quite a few growth deals in the next 18 months, and that's why it's important that we raise a new fund.
So, Dan, you were saying that, well, there's reason to be optimistic, and I like the way you say it's like a full 180. And funny enough, like in retrospect, you timed it perfectly. Coming out of that crypto winter, raising the fund, and then with change in administration and the policies will change. There's a huge amount of opportunity now. So well done.
Thank you.
I don't know how deliberate it was, but let's say it was. Let's talk a little bit of one of the points you raised, which is how the industry is changing. And of course, the technology is always changing. Well, some of it is as new stuff is developed and rolled out. It accrues, so it builds on top of each other. I'm kind of interested in how a lot of the business models are changing in the industry. Back in the day, it used to be, I mean, Ethereum is a good example, right? A bunch of open source developers go and release this Ether cryptocurrency, and they build technology, and they make the money off the appreciating price of Ether. What I'm seeing happen now is people are moving up the technology stack. You can do the protocol level stuff if you want, but it seems like people building applications and companies using these networks and smart contracts, so on and so forth. That seems to be where a lot of the value is accruing now. Do you see the same thing that I do from where you sit?
Well, the biggest change, certainly in the last 6 to 12 months, has been that the on-chain economy has completely exploded. If you look at total number of wallets or the total TVL or dollars, dollar revenue in DeFi, so that's in the decentralized financial world, it's up 400 or 500% from six months ago, and it's up certainly over 1,000% over the past few years. So it's just completely spiked. I mean, some people are pointing to the explosion in meme coins on Solana, and that's driven most of the activity. That's actually not right. I mean, I think that yes, it's been important, but tremendous number of things: RWAs, real world assets, You've got stable coins that have exploded from essentially zero uh, to about 10 trillion settled last year. I mean, how many things in the world do you know that move from zero to 10 trillion in 4 years? Um, you have a much more active Bitcoin ecosystem. Most of the developers are still coming onto Ethereum, but also now Solana to some degree. And I think that the key thing is that, look, Bitcoin and Ethereum have achieved network effect. They're more mature assets. It's not 5 years ago when, people were still questioning, whether Ethereum is going to survive at all. Bitcoin has, been around longer. The proof of work algorithm, I think, uh, cements the security aspect of Bitcoin, that's what its sort of primary use case is. And then Ethereum continues to be, I think, thought of as programmable money.
Yep.
This is the one that attracts developers from the outside to come in and program on top. Solana, I think, is the third core asset. It's sort of transitioning between being what I call a venture asset um, to being a core asset. But, in terms of, as you say, business models, I think that each of these new chains that are in the venture realm that pop up, they're searching for ways to um, establish their, niche, their credibility, their increase the number of users, the eyeballs, everything. Um, but we tend to focus on the more mature, as I said, developed companies, like Circle and Kraken, and QuickNote and Figment and Ledger. And, I would say that most of the companies that we've invested in, they've pretty much stuck to their knitting through the bear phase. And one of the reasons we invested in the companies that we did was that we know that volatility in the space is treacherous, that even if you own Bitcoin and Ethereum, every 3-4 years, you're going to have a treacherous bear market as we did in 23, 24, where you saw, Bitcoin and ETH go down, actually started the second half of 22, but go down over 70%. And so by owning the businesses that we do that are cash flowing positively, have significant cash flow, their businesses are not threatened during the bear phase.
Mm-hmm.
For me, if I'm a novice investor in the space, I say, well, okay, what should my allocation be? I think you have a little bit of Bitcoin and Ethereum. I think you own a little bit of a venture fund, and then you have a bit of a growth fund. And again, I don't think that we're going to maybe net perform as well, let's say, as Bitcoin or Ethereum. I don't know. Maybe we will. A venture fund, can go up 10 times and then lose 90%, and then go up 10 times and lose 90% again. Our funds actually weathered the bear phase quite well. The maximum drawdown from peak was probably around 10 to 15%. So our investors did not really feel any pain. And I would say on the upswing, they're now right. Our space is lagging a little bit. The cryptocurrency moved first, and then venture has moved second back up. And I think this coming year, we're going to see pretty significant moves in the growth equity as well. And then, as I mentioned before, quite a few realizations. So sticking to their knitting during the bear phase, I think was, when you say, did their business models change? I think for some of the ones that were stressed a little bit, they learned how to manage the expense side better. We had a company, Ledden, which is the only centralized lender that survived the, 3AC, BlockFi debacle, FTX debacle. And they had trouble a little bit, but they cut back dramatically, and within a year they became profitable. They cut back on employees. They trimmed the fat, so to say, and got the business to a place that was not just cash flowing but also profitable. And in January they had their best month ever. So I think that I wouldn't say the ones that are doing well, the projects, the businesses, are the ones that have a niche, have a focus, and streamline during the bear phase.
Yeah, the survivors after crypto winters, they kind of lay the seeds for what comes subsequently. And if you survive one of those winters, you don't forget about it very quickly. So now we have all the crop of winners. I've been kind of interested to be looking at two companies. Broadly, the Bitcoin miners, and can go into a few details on how they're changing their business models, but also companies like Tether. Now, you mentioned stablecoins before. What what goes to 150 billion in about 4 or 5 years? Like Tether, the audience knows this. I love this quote. Tether is more profitable than Goldman Sachs. They have 150 employees, right? Now, that's anomalous. And what's kind of interesting is their new CEO, Paulo, he's taking that profit. He set up a venture arm that's separate to Tether. It's called Tether Ventures. And now he's investing that money in what he thinks are the next waves of technology. They've got like an energy brand. They've got one of those like Neuralink research companies. I could go on, but Tether. Now
Yeah.
those people, they're pivoting. They're doing both things, right? They got the cash cow, literally, and then they got the venture arm, and then the Bitcoin miners. The Bitcoin miners, a lot of them have got cheap energy. They've got 10-year contracts, and because Bitcoin mining is really just data centers, you have to kind of change the software for miners, but it's really just data center. They've now got these AI companies who don't have cheap energy contracts that they do, and they're essentially renting out rack space as a new revenue stream. That's very different to the way it used to work. I don't know if you've ever visited any Bitcoin mining places. Like they are data centers. It's a ruthlessly competitive industry, and as you said, like they've come out of the winter maybe a bit wiser, certainly changing the structure. And I guess we'll see what they do. But you might you certainly have your eye on it. I wonder if you've got any thoughts about at least those two trends.
Yeah, I mean, look, Tether is the leading stablecoin business out there. They're not regulated, and they're not buttoned up in the way that Circle is. I would say Circle in the U.S., is sort of the leading buttoned up, you know, stablecoin, I call them almost producer. I think they're going to have an IPO this year in the U.S. that will further cement the fact that they are sort of the legitimate player out there. Not to say that Tether isn't legitimate, it's just that they're in many jurisdictions, and I think that um, they'll have to do still quite a lot of work before they become more active in the U.S. Um, but it just goes to show you how strong the demand is to have a dollar, a digital backed dollar, which is of course just what a stable coin is. And at the moment, they don't really have any competition. And you're right, they're per man more profitable than just about any company out there. I think they're also what they're doing is interesting. It's akin a little bit to what Ripple did and still does, which is that they take their profits from the on-chain world and they plow them back into this world. And they're seeding ventures, but they're also helping this broad, I would call it digital asset ecosystem grow.
Mm-hmm.
And by funding many of the projects and, the interesting things that are growing up specifically here, there are a lot of not just projects, but even mid-sized companies in the space that are having difficulty finding funding because the traditional world just is not yet there. They're not yet caught up or up to speed on why they should be making investments in the space. And in the growth space, you see it almost most severely. There are many venture companies probably in the next 2 years that will need growth funding. And I just don't think it's going to be there.
Mm-hmm.
The growth investors from the traditional world who came in 2021 got killed. Many of them invested in FTX, Sequoia famously, and you had other large, very well-known investors like Thoma Bravo, who are, fantastic tech investors, but came into the space. They paid very high multiples and, feel like they were taking advantage of it. I don't really see them coming back. I hope they do because there are many companies that will need their funding. But it's still pretty tight, as I said, especially in the growth space. There hasn't been, except for the Phantom deal, any significant growth deal in almost 2 years. So Tether, I think potentially with its massive profitability, maybe Tether ends up funding some of those businesses, just like Ripple with their very large treasury does. I did a deal. In fact, we made an investment in one of the leading metaverse blockchain gaming NFT businesses called Futureverse, and we invested about 20 million, and Ripple joined us. I think with a little more than double that investment in that investment. So um, I do see, in a way, Tether could become a portfolio, could have a portfolio underneath the hood, so to say, of companies in the digital asset ecosystem. And look, they're very close to the, they have the ears on the ground and they see all the flows and they know it's successful. I mean, I would invest in Tether portfolio. On the Bitcoin mining question, I know less about that. Of course, they are selling their power now to some of the AI, entrants, and I think that the hash rate for Bitcoin is at an all-time high, so it's never been more secure. Um, and I think the demand for Bitcoin, we have not just the 100,000 price, but in terms of actual number of transactions, value of transactions, has just been going straight up. So um, I it's a business that we don't, Bitcoin mining, we don't really invest in because it has such a strong correlation to Bitcoin price itself. And we tend to want to get more of a broader, diversified exposure. Our investors can go and directly buy Bitcoin themselves. They don't need us to do that. We do own Bitfury in the first two funds that we did. And through Bitfury, we have a stake in Cypher, which is one of the low cost producing public companies worth, I think, around $1.5 billion or around 2 billion in market value. We really like Cypher. We like what they're doing, and we still maintain that long. Um, but in terms of how their business model has changed, the specifics, it's been sort of written about quite a lot. We're just not focused on.
Yeah, makes sense. The I'm noticing. So I was speaking to somebody who's made the same point as you did, which is we're using the example of Tether. Investing in the ecosystem helps grow the pie for everyone. They've got the expertise. They're sitting on piles of money. Deploy it, right? And that's going to be really interesting to see play out, because if indeed these folks have got a stake in the ecosystem and they do things correctly, unlike Senor Bankman-Fried, then that creates the next wave of opportunities, and it de-risks a lot of the things that we've seen in the past that have, as you said, left people out in the cold. I'm also noticing a lot of these companies raising convertible notes. And then
really? Which ones?
I'd have to go to my notes.
Okay, that's all right. Don't worry.
But I can find that for you and put it in the show notes.
I don't think that's a bad way to go about it.
Yeah, it's maybe I've got confirmation bias because I've heard people speaking about it and then I start seeing it turn up. But the convertible notes are happening. There's another one. Companies putting Bitcoin on their balance sheets. We know Tesla for years. We know Michael Saylor. Semler Scientific has just done it. There's one company out of Japan that's bought 500 million yen in Bitcoins. Metaplanet, I think it's called. And then of course there was the one that turned up in the Financial Times the other day. Pension funds are buying Bitcoin. So suddenly,
right.
The way people are using the technology is changing, and it's becoming almost like the Overton window. It's like, well, it's not just Michael Saylor and our strategy who are doing it, or Tesla who's doing it. It starts to look like something that, because of the returns, I guess, and the low correlation with major currencies, it's starting to look like a genuine strategy. And that I'm also watching, because it didn't used to be that way. As you said, anyone can just go buy the Bitcoins if they want. You've got a different strategy. But when I watch companies raising convertible notes for $500 million to buy Bitcoins and put it on their balance sheet, that strikes me as anomalous and worth keeping an eye on.
Yeah, I think what Saylor and the others are doing really is they're just borrowing money from the traditional world and from the fiat world, and they're investing it in the new digital world. And Bitcoin specifically. So, if we look at the returns over the last 10, 12 years, every single asset in the traditional world has gone down 99% against Bitcoin. I mean, NASDAQ, S&P, gold, dollar, everything. I mean, of course, you're looking at Bitcoin, which was, at one point less than $100, and now it's 100,000. So there's no asset out there that's comparable. So if you were long any of those other things, you've got killed,
Mm.
relatively speaking. So I think it's a good strategy. I think he'll do well. Uh, I don't, he is taking on quite a lot of leverage, but he's a big boy, knows what he's doing. So, yeah, I think you'll see more of that. Absolutely.
There was one other, I think, was a Bitcoin mining company who basically said, "Oh, actually, we're not selling it. Like, we'll keep it on our balance sheet. Thank you very much."
Yeah, that's wonderful. I mean, it's like, I think it's the core collateral to the new financial system that will be with us 5, 10 years from
Yeah.
now. So holding that collateral is very valuable.
And as the network effects kick in, Metcalfe's law, then it starts to,
Well, I think that's kicked in a long time ago.
yeah,
Yeah,
but it only strengthens, like, as if network effects aren't powerful
absolutely.
enough, right? It's, yeah, well, people don't argue and say, I think it's a fad and it's going to go away. They don't do that to me anymore. So
No,
there's some
I
progress.
think I think that the time for people debating that Bitcoin is going away or going to zero, I think that ended a while ago. But when you have Larry Fink 2 summers ago coming out and changing his opinion, January of 24, you have the advent of all these Bitcoin ETFs, and now you have Ethereum ETFs and Solana ETFs, and you have multiple firms getting involved. I just think that you've onboarded probably $100 trillion of assets through the equity brokerage account, right? Because everyone, at least $100 trillion out there of assets held in brokerage accounts. I mean, total globally. And so it becomes really easy to just buy one of those ETFs as opposed to going through the process of, setting up a Kraken wallet or a Gemini wallet or whatever it is, right? So even though that's very simple, but people get used to what they get used to. So I think we're in this period where the first, like we're at the beginning period of, like, I call mainstream adoption.
Okay.
At the very beginning just now.
Yep. Yeah. I love the adoption curve, and it's definitely getting into that thick part of the bell curve in the middle, um, bringing in people who previously either did not want to have any exposure, didn't know it existed, not safe enough. Uh, that whole that middle of the bell curve is filling out very, very quickly, partly for the reasons you correctly point out. I know we're going to be up on time soon, but there's one last thing I wanted to ask you, and it's
Okay.
linked to the first point, the Bitcoin strategic reserve. now,
Yeah.
now, one of the largest holders of Bitcoin in the world is the United States government, because they confiscated it from criminals over the years and haven't sold it, or if they haven't sold all of it, and there's appreciating value. So the whole idea of like governments buying Bitcoin is not unusual. I used to live in Bhutan, and they've been mining
Oh,
Bitcoin
sure.
with hydropower, right? So
Sure.
there's at least a handful of nation states who are actively creating. You could call it a strategic reserve. You could just say that, like, they're keeping their holdings that have been confiscated from people, so on and so forth. But do you have a view on what's going on there? Because I'm conscious that
Well,
when these things happen, sometimes nothing actually plays out. But when I see something like 25 states with legislation in the United States for their own state level allocations, and then I see the pension funds buying it, the insurance companies will be next. What do you think about all of that? Is it just a lot of hot
yeah,
air?
I think it's happening. I mean, look, with all these things, it happens slowly. Balance sheets often need to be diversified. Look, every government, every central bank in the world has gold.
Yeah.
Uh, some of these countries around the world have massive sovereign wealth funds as well. So not only that, they also own assets. The Swiss sovereign wealth fund, Norwegian sovereign wealth fund, very well known. Temasek, of course. That all of these countries. So now the U.S., I think, is aiming to have a $5 trillion sovereign wealth fund. That seems somewhat reasonable. I think we probably especially with Scott Messon at the helm, who's a very well-known, famous, excellent fund manager. I'm sure he'll be making, or he'll have the right people making the right decisions about where to invest in that sovereign wealth fund. But to have a few percentage points in the sort of the money of the future, the technology of the future, and I think it's much more than just money. I mean, it's a decentralized ledger. It's a source of truth, I think, for all transactions, and it's fully decentralized. And so, how many? There's no such thing. There's no other thing that looks like it. It's completely unique. Things like that generally are worth a lot of money, and there's no reason why a government can't take a position or own a piece of, the collateral of the future. So it seems reasonable to me. I don't think it's necessary in the sense that I think we're sort of moving that way. So people who are, hootering, and hollering about, oh, we need to have a strategic reserve, etc. I think it's okay to have an allocation, uh, um, but I think it's going to happen anyway, whether it's now or 5 years from now. Of course, the price will be higher 5 years from now, but um, yeah, I look at the balance sheet of the central bank and of the government. We have all sorts of different assets, so having some digital assets on the balance sheet makes complete sense.
Yeah. Yeah, even a small allocation given the asymmetric historical returns.
Correct.
Yeah, you, it doesn't really need to be a huge allocation. And then over time, it's a little bit like buying the tech stocks following the dot-com bust. You might have gone pets.com, but you got Amazon, Apple, Google, and then that portion of your portfolio grows because that's the growing part of the economy, right? Anyway, we've covered a lot of ground today. I always enjoy chatting with you about all these different topics. Finishing the episode up, we've been thinking about the future today. Um, I always ask my guests, particularly those who have to manage portfolio and think about how the world's going to change. Anything off the top of your mind, and it doesn't have to be around digital assets, but what have you got your eye on at the moment out there in that big, wide, ever-changing world?
What do I have my eye on? In what sense? I have my eye on a lot of things.
Well,
On what sense?
it's kind of like, well, we've talked about like the Bitcoin miners changing their business model. That's got my attention, and the convertible notes. I'll get you the company names. Um, Anything like that is anomalous or you think is
Well,
interesting?
what I would say is I would step back sort of bigger picture conceptually and
Okay.
say that people who are just thinking about this for the first time should understand that we're moving into a world where anything of value, whether it's physical, like a painting or a car, or whether it's IP, you have some idea, or anything that one can attribute potential monetary value to, will eventually be put on a blockchain and reside in this digital asset ecosystem. So I would, you know, I would start to think about, and that is in total, look, there are $800 trillion of total assets in the world. I think that's the number. I think all of that is coming on chain. And so if you're sitting back and you're listening to this and you don't even know what that means, it's all coming on chain. I think it's probably time to start doing some digging, start doing some research, reading. There's plenty of material out there. I love the Antonopoulos books. I love Jan Pritzker's book, um, Inventing Bitcoin. I love the Safadian Amos book, The Bitcoin Standard. There are million, I don't know, but there are tens of, hundreds of podcasts that are worth listening to. I like my old friend Raul Pal at Real Vision. He's excellent. The Castle Island guys do a great job with their this podcast. There are all sorts of avenues to learn about what that means for you, that the world is moving on chain. So I think that maybe 5 years ago, people would have said, well, what does that mean? How does that work? I don't think that's right. And now it's happening. And so the world that we're going into is a world where I think the total value of that will be in the digital asset ecosystem 10 years from now will be 50 trillion. Today it's 5 trillion. That's the value of Bitcoin. 2 trillion. The value of all the old currencies plus the value of all the equity in the space. And I see us hitting sort of 50 trillion in the next 10 years from 5. So I just think that even if you don't know what this is the first time or second time you're hearing about it, start doing the research and thinking about the future.
Yeah. And what's interesting there, just as a last thought, if we transpose that concept onto other technology trends, nobody argues with me about robotics, right? Oh, I don't like robots. And nobody argues about cloud computing with me. They might try and argue about encryption. But what's interesting there is like it treated agnostically like any technology trend. And yeah, there's plenty of information out there, as you rightfully point out. But what's the other one? Supersonic air travel. Boom. No one's arguing about supersonic air travel. Boom's just doing it, right? So yeah, we've now come far enough down the path here. We know it's not going to disappear, and we have lots of good information. I agree with you, absolutely. But we're out of time. Dan, thank you for joining me again.
It's a pleasure. Thank you for having me.
Always a pleasure. Well, there you have it. Dan Tapiero, folks. Founder, CEO, CIO, managing partner of One Round Table Partners. For those of you in the US listeners, WisdomTreePrime.com, Apple or Android app stores. Subscribe and share. Love when people subscribe and share the podcast, because we're just trying to share good information with you from extremely knowledgeable people in this industry. You can find me on the Bird app at Benjamin Dean, X. You know I'm on there too much. So come and join me. Thank you very much for joining us today. I hope you found it interesting, informative, and I hope to see you again in the next episode.